Welcome to Tampa Home Talk with your host, native Tampa real estate girl, Katrina Madewell, a full-time, passionate, out-of-the-box thinker, love for home ownership kind of realtor with over 21 years of combined mortgage and real estate experience. Tune in every week at this time for expert advice on everything you need to know about home ownership, finance, maintaining great credit, building wealth, and making your everyday life better, and how you can be financially successful today and tomorrow. Remember, love where you live or let Katrina fix it. Now, here's your host of Tampa Home Talk, Katrina Madewell.
Good morning. You're listening to Tampa Home Talk. I'm your host, Katrina Madewell. Thank you so much for joining us again this morning. Now, if you missed our show last week, definitely catch it because we talked with Brad Hubbard. He is the founder of National Flood Experts, and Ann Pellegrino is our guest for this topic this week. We thought we would roll that whole flood conversation a little bit more into this week because there's so many details surrounding this, and the changes are just going to keep coming and coming and coming. Now, if it's your first time ever listening to Tampa Home Talk, the mission of our show is to help our listeners keep and maintain great credit, live within their means, and build wealth. And so my team and I are passionate about it. We also talk about anything in and around the real estate space and anything that can make your everyday life better. So without further ado, I'd love to introduce Miss Attorney Ann Pellegrino. Welcome to the show.
Thank you.
Did I get your name exactly correct?
Yes, you did.
Okay, great.
Ann Smith Pellegrino, or Ann S. Pellegrino.
Okay. So Stetson University graduate, College of Law.
Yes, I am. I'm very proud of that.
Definitely. And so you do a lot of foreclosure defense.
Exclusively.
And so the reason why I thought this would be a great topic to pull over from last week is because some of the clients that you have been able to help in recent years have to do with these rising flood policies.
Yes. Many of my clients, when they first come to me, the first question they ask is, can you help me save my home? And now in the last couple of years, since the passing of Biggert Waters, the first question I ask them is, do you live on the water? Do you live near the water? And they look at me so surprised.
So talk about who you are, like as an attorney, who you are, what's your background, what made you want to do foreclosure defense?
Well, I went to law school when I was 52.
Okay.
So
that's
second
sort
career
of a
little, yes, it was. And when I graduated in 2002, took the bar within a few months, right at that time, the 2002, 2003 era, it looked as though the economy was not going to be as comfortable as it had been. In fact, I saw signs that it was going to crash. And indeed, it did.
There was a lot of changes and a lot of lifestyle changes and just global changes that I think some people will never get past after the housing collapse.
And when I had my general practice clients coming in, they were asking me about the possible crash, or that you had lost jobs, or they expected to lose a job, and what could I do to help them in the event that they would experience a foreclosure action. And many of them came to me with a foreclosure action.
And we talked about this as well before the show. And, you know, the movie The Big Short, I was waiting for it to come on video, and it finally did.
Yes.
There's a lot of truth in that movie for people like me that have been in the industry for a long time that really understand how it works. And unfortunately, there was a lot of intentional fraud.
Oh, yes. Back in November of 1999, the Graham-Leach-Bliley Act was passed. And it was passed during the Clinton administration, but Graham, Leach, and Bliley were Republican. So this was a bipartisan effort. It's also known as the National Financial Services Modernization Act. And through that act, that is what created this risky mortgage, risky lending, also integrating insurance and securitization Wall Street stocks.
The way I explained it, even before the movie, right, when it collapsed and people were like, well, I don't understand what happened. My house was worth this and now it's worth that. And, you know, from an outside, and my background, I own my own mortgage company at 23 years old. So I'm very familiar with how it works. I've been doing it for a long time. And I saw a lot of things. A lot of the underwriters, the mortgage underwriters that actually approve your loan that are behind the scenes that you never talk to or know they exist, they're there. And I knew many of them on a first name basis. And I can remember a lot of these loans that were being written and the underwriters saying, Katrina, I can't even believe I have to approve this loan. It's going to come back. It's going to come back. We all knew it.
Yes.
Because the banks never would have taken that risk. And the problem is that Wall Street got greedy. They loosened the guidelines, for they package them in bundles and sell them as security bundles through Wall Street. And so that's how they make them. They make money selling these mortgage-backed securities. So they loosen the guidelines. And so what they would call A-rated paper, people with good credit or good risk, they loosened it so much that they made it in that same group, and they really weren't.
Yes, and the SEC was not truly regulating. They were doing exactly what the banks wanted them to do. Quite frankly, I have a different perspective. I see the major banks, J.P. Morgan Chase, Bank of America, Wells Fargo. I'm naming them because those are the clients that I have. Not the banks, but their borrowers are my clients. And I see what has happened. A lot of predatory lending was occurring. One of the first cases I had was a woman who was in her 70s living on $600 a month. And because her adult daughter was living with her temporarily, her loan was approved. It made no sense. Actually, they had come knocking, meaning the mortgage broker, had come knocking at her door several times. And that's what I'm talking about, predatory lending.
Well,
it's one of the reasons I stayed in this area of practice.
Unfortunately, a lot of the people that were doing those things are no longer around, right? When the market dried up and it got hard and people had to figure out a way to make a living because these, rules were no longer the same because this is not a real way that the industry works. They're all around. So the people left, like me, like you, people that have been in this industry for a long time, see the mess that was left, and it just makes the rules harder for the rest of us.
Yes.
That's what I see anyway, from my perspective. So let's talk about the Bigger Waters Act.
Oh, yes.
When it went into place, what it is, how it relates to flood insurance, and then we'll talk a little bit about, where you think this is going. We talked about it on the show last week with Brad and how, every April there's an increase, sometimes by 20% or more.
I have a very different perspective than Brad. Thank God for Brad Hubbard. He is out there trying to help and bring down these rates for many, many families. But it's not going to be enough for many families. And definitely our coastal areas, our beach communities, our mom and pop little beach houses, they're going to be something of the past.
And for the person listening, they might not have caught last week's show. And so Brad Hubbard, he's with National Flood Experts, and he can actually go in and redetermine or reassess, review for free even if you're in a flood zone. A lot of times they can determine if you can be mapped out of the flood zone, if we can get your flood insurance down. Excellent, excellent resource. But can we talk about Bigger Waters, like what that is, why the federal government feels like it's in place, and then we can talk about your opinion as well, which is very different than someone else might believe is in place.
Okay. So Bigger Waters, which is actually more formally known as the National Flood Reformation Act.
Right. Reform.
And more commonly known as Biggert Waters. Judy Biggert was Congresswoman of Illinois. Maxine Waters, Congresswoman in California. They sponsored the bill.
Now, why do you think they did that?
Oh, well, Big Waters. Come on. At least for the name. But why did they do that? Because there was a great deal of pressure.
From insurance companies?
Pardon?
From insurance companies?
Not so much insurance companies, the financial industry. There is a larger plan, a bigger design, and the design is this: to move America away from an ownership society and towards a rentership society. Now, that sounds very drastic. I know that.
It does. And so the person listening might be thinking, whoa, that's out there. Where are they going with this?
So what is happening is the insurance rates are going to be so draconian, oppressive in nature, that it's going to pressure mortgaged property owners, both residential and commercial, into mortgage defaults. And then comes the foreclosure of the bankruptcies.
I'm going to have to pause you there because we have to take a quick break. And this is such a big topic that we're going to recap on it as soon as we come back from the break. We have Ann Smith Pellegrino. She's a foreclosure defense attorney, knows a lot about the Biggert-Waters Flood Act reform. And we have to take a quick break. You're listening to Tampa Home Talk. I'm your host, Katrina Madewell. Stick around. We'll be back in just a minute.
Hi, this is Aaron Davis, owner of Hillsborough Title. Hillsborough Title is a local, family-owned title agency here in Tampa Bay. Our service, strength, and knowledge make us different. We've served Tampa Bay area for over 30 years. From Polk County to the Gulf, Pasco to Manatee, Tampa Bay, we've got you covered. Call us at 813-712-8888, 712-8888, or visit us on the web at thebesttitle.com, thebesttitle.com. That's thebesttitle.com.
I'm Katrina Madewell with Keller Williams Realty and Tampa Home Talk. And for more than 23 years, we have been helping homeowners sell. Flexible terms with the right to sell it yourself. Let my results speak.
They were able to get us a full price offer and a contract in our house in 9 days.
I just wanted to express my gratitude in finding a cash buyer for my property in less than 24 hours.
I'm not bragging. I'm applying for a job. I want to be your realtor. Call 813-777-1196. Thank you.
Hey, remember the mortgage meltdown of 2008? Have you tried to get a mortgage since then and been turned down? Or maybe you haven't even tried because your credit score is stuck at 585 or your tax returns have too many write-offs. Well, Cash Call Mortgage has great news for you. We've just introduced programs for people who've been told no. And what's doubly exciting is that we can solve your mortgage problems with no closing costs, no points, title, escrow, and no fees.
Wait, Cash Call, are you saying you now have credit and income-solving mortgages with no closing costs? Are you kidding?
You heard right. A credit or income-solving loan with no closing costs. Call 855-875-CASH and we'll work with you to solve your mortgage issues. Make the cash call at 855-875-CASH.
First Mortgages, Impact Mortgage Corp., DBA Cash Call Mortgage, 1 City Boulevard, Orange, California, 92868, NMLS 128231. Equal housing lender, not licensed in all states, not available in Washington State. Call 855-657-9910 for licensing, terms, and restrictions.
That's 855-875-CASH.
Welcome back. You're listening to Tampa Home Talk. I'm your host, Katrina Madewell. Thanks so much for sticking with us through the break. We have in studio today Ann Pellegrino. She is a foreclosure defense attorney, graduate of Stetson University College of Law, and knows a lot about this flood stuff. And so if you missed the earlier part of the show, she's got a whole different opinion. You know, living on the water, living near the beaches, and knowing a lot of the stuff that you see going on, especially in Pinellas County. There's a bunch of stuff going on. And so before the break, you were saying that you feel like the government is pushing us towards a renter society versus a homeowner society?
The financial industry, Fannie, Freddie, the Federal Reserve, and through the facilitation of our professional politicians, are moving America away from an ownership society and towards a rentership society. I have shown you supporting information on that. Back in 2011 or 12, even Morgan Stanley put out quite a large article about that. And it wasn't a temporary.
So why do you feel that is? We'll take the article link and we'll post it on tampahometalk.com and on our Facebook and our Twitter feed. So just hop on over to Tampa Home Talk. You can read a little bit more about what Ann Pellegrino is talking about. But talk about the short version, like what's in that article that someone would read.
Well, again, it is talking about moving America from the home ownership society to the rentership society.
But why?
And making, well, I'll tell you
Yeah,
why.
why do you think you're doing this? Because our country as a whole has been about home ownership. You know, that's why we have mortgage insurance, which most people don't like. It insures the banks against default. But, you know, if you buy a property in Europe, you're going to be putting a lot more than 20% down. Yeah. And the country's been around for a long time. That's how it works.
We have mortgage insurance, but does it help the homeowner?
It's strictly for the bank. Yep.
No, it only helps the bank. The bank, when you go into default, the bank is paid that insurance. The bank sells that home again
it's a default
and again
insurance.
and again to different investors, not to different homeowners, but to different investors. And each time they do, they get some more insurance, and they make millions upon millions on your little 3-bedroom, 2-bath home.
So why do you think that the banks are pushing, and the government rather is pushing towards getting rid of homeownership?
They're moving us towards a more urban-centric society. And if you look around, what do you see? Are you seeing new development of housing communities as you did years ago? No. What are you seeing? Drive around your community. What you're seeing are multifamily dwellings, apartments, condos, that type of thing. And most of those will be rentals. They will not be homes that you purchase, the condos in the sense that you purchase them.
So if that's the case with flood, do you think more people are going to be mapped in a flood zone? Let's just say this is true.
So let's bring it back to Biggert Waters. So Biggert Waters is the flood insurance, and to cover your home if it's flooded. But
so the
insurance policies are extremely expensive.
Let's talk about that for a second, because when this whole thing first came out, you know, the government's take on it was, well, the government has been subsidizing flood insurance premiums for years. They've been subsidizing flood insurance premiums for years, and now the government can no longer afford to subsidize these flood insurance premiums. So now they're saying that basically they had to charge full premiums. And so in a little bit, we'll talk about what happened in 2014, 2015, the Homeowner Affordable Flood Insurance Act, because that was almost another overnight instant housing collapse had they have left that where it was.
And they snuck it into a transportation bill. And did you see anything in the media?
I didn't read the whole bill, and it was a crazy amount of pages. I mean,
and how did you find out about the bill?
We found out about it through like NAR, National Association of Realtors. They let us know. We get different memos that it's coming out. It's going to hike flood. And we had heard about it for a while, like a buzz for about a good year.
So if you're not a real estate agent or an attorney.
It was like overnight, it seemed like it happened.
Exactly. And there was no media coverage on it. And I can tell you for sure.
Well, there was media coverage after it passed.
Oh, yeah, after it passed. But there wasn't, and there really hasn't been that much national media coverage, the mainstream media coverage. Programs like, yes. But have you seen it on cable? Have you seen it on national network? No. And let me tell you, they knew and they know, because I wrote to every single one of them, every single one. And they did not cover it. In fact, I was going into courtrooms, judges, attorneys, opposition counsel, hadn't even heard of Biggert Waters, even months and years later, still to this day.
Well, people were petitioning the courts. They were, getting together in droves because the changes were so drastic to flood.
Yes,
and
Mary Landrieu,
you couldn't
Louisiana.
transfer the policy, so you had to get a new policy. That meant anyone that was in a flood zone couldn't sell their house because the flood insurance premium was so drastic.
Exactly.
So we had Brad Hubbard in the studio last week, and I'd love to have him actually chime in on this and what he thinks. We talked about the premiums going up 20% a year. What do you think you're going to be able to do to still help people like you are right now?
Well, I had so much fun last week that figured I'd come by and listen in again. Didn't know I was going to chime in. With it going up 20% per year, those are the homes that are going up 20% per year are older homes. They were the homes that were built before they did the maps, the ones that were previously subsidized, and now they want to change the rates to what they say are the true rates. How we can help there is some of the times they're incorrectly rated. The beach properties, things like that, there's not a whole lot what we can do. But what we can do is we can come in and say, if you add in some flood venting, you can change how you're rated from either being the ground floor or the ground, your garage floor up to the finished floor of your actual house. Several condos that are paying a lot of money because they're being rated down at their parking garage. We can show them what to do to get them rated back up where people are actually living.
Do they have to actually count that if you have only parking downstairs and there's no living space?
If there is an elevator, possibly. If you've got a bathroom downstairs in that parking garage, like maybe for a pool access, if you've got bathrooms down there, you are rated at that bottom floor. So there are a lot of ways that you can be rated for your parking garage, for your $20 million condo building, with nothing on that bottom floor except for, a couple bathrooms.
I'm thinking about an attorney that was a client of mine that lives on Bayshore in a townhome. I know she's going to be selling her home soon and, buying a different one with her soon-to-be spouse. In this townhome, I remember when we bought it, it's been several years back, pre-Biggert Waters. They were saying, yes, this bottom floor, like where parking is, like a lower level, we're not going to insure that for flood. So you can have stuff here, but we're not going to insure that. Just curious on what your take is on how you think that may change for her sale in the future.
They've sort of changed it in that they won't let you just not insure, like, well, you know what, don't insure anything on my bottom floor. Let's just insure everything on the top floor. If you go through all the underwriting now, you have to meet certain criteria in order to be able to do that. So depending on how that home was built, they typically don't insure anything new built below base flood. Flat answer. So if they have a basement,
so they're just flat out not going to insure it, or you have to rip that stuff out. Like, what are you saying?
You can't have anything finished below the base flood.
So no drywall.
You can't have drywall. You can't have electric. You can't have flooring. You can't have toilets. You can't have any of that. It has to be storage or parking. That's it.
Wow. I think that's going to be, we might have to have you in to look at that property before we actually list it so we can ward off any problems in advance.
I've done that before.
Yeah, and I think Brad's going to help a lot of people that are not as close to the Gulf, who are not directly on the bay or maybe even the canals.
Where do you guys see the end of this being? I mean, we talked about it going up 20% a year or more. Where do you think the end of this is?
I can use my own home as an example. I live in St. Petersburg Beach, and specifically in the Pasagrille area. And the quotes that I'm getting right now is that when the full flood risk rate applies, which will be possibly in another, Brad, you'd say 3 or 4 years.
It depends on how much it's going to go up, but if you factor 20% times 5 years.
But it's going to go up to about $45,000 a year on top of my mortgage. And that's a low estimate. Then I would have to call someone like Brad and a very good insurance agent and see if I can get private coverage. And still, it will probably be between $10,000, $15,000, $20,000 a year.
Well, you're listening to Tampa Home Talk. Hold that thought, Ian. We've got to take a quick break because we're getting music chiming in. So we'll be back in just a minute. Hold that thought, and we'll continue where we go.
Here we go. It is time for traffic. But first, if someone else's negligence has caused you to suffer a brain injury, the trial lawyers at Papa & Gipe, a personal injury law firm, can help you out. Give a call at 727-461-HELP or log on to papaandgipe.com. Let's look here on the old billboard of accidents for your morning ride. 41 and Causeway Boulevard, still working a crash there. Tampa Road and Racetrack's our latest one in Hillsborough County. East Bay Drive at Newport, that puts us to the west of 19, still working a crash there. And that bad one on Land O'Lakes Boulevard and Hale Road. Also, Gulf to Bay and Belcher should be in its final stages. And thanks to Katrina, some of her friends called us and told us that Collier Parkway, we've got a heavy traffic on that. This report brought to you by Indeed.com. Are you hiring? Join over the 3 million businesses that use Indeed.com for hiring. Post your next job opening on the world's #1 job site, Indeed.com. We'll be back to Home Talk in just a couple minutes. Don't go anywhere.
As a business owner, remember, when sales are good, that's the best time to invest in your marketing efforts. I'm Mark Steckman with Beasley Media Group, and this is your Money Marketing Minute. Great marketing acts as an insurance policy for your sales by continuing to drive business today while keeping the momentum going during the lean times. Great marketing that makes you money doesn't happen by accident. It takes a plan and consistency. For an edge over your competition, a larger share of the market, and to ensure strong future sales, go to moneymarketingminute.com and register for a free marketing analysis. I'll show you how to make your marketing dollars work harder and make you more money this year. I'm Mark Steckman, and this has been your Money Marketing Minute.
Tampa Bay's business address is Money Talk 1010 AM and available on HD at 99.5 HD2. 24 hours a day, 7 days a week. Money Talk 1010 AM. Tampa Bay's business address.
All over Tampa, they're talking about HugeKiaCredit.com. You know, that guy came in the other day. He didn't think he could get the cadenza. He was a 601 credit score. He left in a brand new cadenza lease. He had no idea, but it's that easy. And he went to Mexico, too. That's right. He went to Mexico. He's going to Mexico with us on that beautiful trip, and he got the beautiful cadenza. This guy's ecstatic. He was at 4 or 5 other places. They told him he couldn't lease a car. What? Come on.
Yeah,
when you come here to Facilio Kia Wesley Chapel, folks, regardless of where, if you can hear my voice right now, whether you live in Lakeland, okay, you might live down there in Bradenton, no matter where, Clearwater.
Southwest Florida.
Oh, no, not Southwest Florida. That's a long drive. They go to my Cape store down there. It's all about being, I'll tell you something, Gloria, I'm excited about this lease. I never thought we could do it for this kind of money, under $300. It's huge.
Lease a 2017 Kia Cadenza for 0 down, $285 a month, MSRP 33,110, 24 month, 24,000 mile lease, 12,000 miles per year, 20 cents per mile over limit, or 36 month, 30,000 mile lease, 10,000 miles per year, 20 cents per mile over limit, 7% taxes, 0 do it signing, tax, DMV fees, $595 acquisition fee, and first monthly payment of $285 including payment structure, 7,000 Kia lease cash, 2,000 Cadenza bonus cash, and 1,000 competitive owner loyalty cash apply, 400 disposition fee, 400 early termination fee, no security deposit required. Offer with approved credit through Kia Motor Finance. Prior sales excluded. See Fusillo Kia for details. Pricing available October 3rd, 2017 through October 31st, 2017.
Here's a recipe for some fun. Take 2 microphones and a telephone. Then mix in a redneck like Q105's Mason Dixon and a former Army sergeant and radio guy like Charlie Oakes. Put them on the radio every day at 11 a.m. Turn them loose, then open up the phone lines to add spice with your comments. The result is an entertaining hour on Mason Dixon Wide Open with the Sarge. You can be part of the show every Monday through Friday from 11 a.m. till noon on Money Talk 1010. Your toll-free number to call in is 888-404-1010. They'll be talking about whatever's on their minds and your mind. And with these two, you never know where that'll take them. No subject is going to be out of bounds. Just keep it clean. The subjects go from political talk to what's happening in Tampa Bay. And they love anything with wheels and an engine, so cars will always be a subject. Listen to Money Talk 1010 every Monday through Friday at 11 a.m. for Mason Dixon Wide Open with the Sarge on Money Talk 1010.
Welcome back. Thanks so much for sticking with us through the break. This is Tampa Home Talk. I'm your host, Katrina Madewell. In studio, we have Ann Pellegrino and Brad Hubbard. He was here last week talking about, he's a national flood expert. He actually can determine remaps from those flood zones. And before the break, sorry we had to cut you off, it was a hard break at the bottom of the hour, but we were talking about, you used your own home as an example.
I always do.
And so you're saying that, what was your flood insurance, and you think it's going to go up to $45,000 or more within 5 years?
Yes, it was just a few hundred. Now it's gone up to about 600 or 700, and it's going to go up and up. And then once the full flood risk insurance rates are imposed, then it will be about $45,000, possibly more a year. I'll get the private insurance coverage.
That's what I was going to ask. Like, what options? If I stay. Talk about that. Do you know much about that?
It's not good. I will tell you this, that one of the reasons that Bigger Waters was implemented was also for the financial industry to build a new arm of profit through flood insurance, private flood insurance companies. Prior to Bigger Waters, there were only approximately 3 insurance companies to provide private insurance.
So you think it's basically a private insurance thing, a profit thing?
They were Bankers Group, Lloyd's of London, and a small company over in Tampa, believe it or not, called Home Choice. Now that list is growing exponentially. Do you know how many are on that list now?
The last list I saw, it was preliminary, but it was 15 or 18 that were looking to become authorized to sell private flood.
And the list is growing every day.
We were talking about something a second ago, and I thought you had something to chime in on.
Yeah, just talking about the private flood side, and it was exactly what I just said, that there are movements through, especially in Florida, trying to privatize flood and even pull Florida entirely out from the rest of the country because we're a donor state.
What do you mean? What does that mean?
Okay, well, since the beginning of NFIP, since flood insurance was
nationalized. What's NFIP? What is that?
Sorry. Up. NFIP is the National Flood Insurance Program. That's what's run by FEMA. That is FEMA's arm that runs the flood insurance program for the country.
And FEMA, I think most people know it stands for Federal Emergency Management Agency, but
yes,
they're who regulates flood.
Yep, they regulate all disaster, but specifically flood here. Over the history of the NFIP, Florida has paid over $12 billion in premium, and we've only had $4 billion in claims. So since it started, Florida has donated to the rest of the country $8 billion in flood insurance premium, to where we're only like 6th or 7th in amount of claims that have happened across the country, but we're by far paying the most. So a lot of the congressmen,
so we're being penalized because we're a peninsula. That's what I'm hearing.
Pretty much, we have about 38% of all flood insurance policies in the country.
And Ann and I talked about this a little bit before the show, but I was thinking areas more like around the Mississippi Basin and the river and like all those areas, they would get a lot more flooding than we do here.
They do. They definitely do. But we pay for it, basically. Yes. If you look at the numbers, Florida
is... So how is that fair? And what I was thinking is, why can't they just tack on since this is federal emergency agency and they go, like the Red Cross comes in to help people when they get flooded that don't have flood insurance or whatever. Why can't we just tack on a small premium? Like this would make sense to the homeowners that covers everybody in the event you have a real flood emergency.
Spread throughout the country.
Right.
Yes, exactly.
So where Florida's not paying all the premiums.
Exactly. I want to read something. It's something that I put in my warning information to my clients so that they have a better understanding of this. But the Biggert Waters Flood Act is supposedly meant to refund the Federal Emergency Agency, the FEMA. Yet, according to FEMA's own reported data, FEMA shows no real loss when compared to the collection of premiums versus claims. Instead, the premiums for 1987 through 2011, and by the way, Biggert Waters passed in 2012, premiums for 1987 through 2011 for subsidized policies have been $26.2 billion, whereas claims, even after Katrina, even after Rita, were $24.1 billion. Now, that leaves a surplus of over $1 billion after we've had some of the most catastrophic hurricanes that this country has experienced. And my point is, everyone seems to feel that FEMA is in the in the red.
That they're at a loss.
No,
they're
not in the red.
Because that's how the government portrays it, that there's been all of this loss. They've been subsidizing it for years. They can't afford it. Like that's how they portray the Biggert Waters Act.
And think about it. We're constantly renewing our policies. So they would quickly make that up. And so back to what you were saying, Katrina, and I agree with you. Why make this oppressive? Why put families and businesses in danger of going into collapse? Why not look at this again and spread this out throughout the country? Now,
the crazy part, like what I think about, and a lot of people I know that listen to the show because Dave Ramsey also airs on the same station. They're trying to eliminate debt, including their mortgage. So the one crazy thing that has changed, like if you still have a mortgage payment, even if you don't escrow, meaning your taxes and insurance are not included, if you have flood, the lender is going to be required to hold escrow on that, which I think is, whatever. I have my own opinion on that. Mm-hmm. But my thought is, what happens even if you pay off your house, and I think about the shared responsibility payments with Obamacare and health insurance, not to get off topic, but you're now required, and if you don't, you're going to get a fine. So I'm kind of curious, like if some of this may play in the same way with flood over the next several years.
Well, initially, those who had a satisfied mortgage were not required.
Right. And that's sort of the case, right? Like if you have a paid off house, nobody can make you have homeowners insurance. You have to pay your taxes, but you can choose to self-insure and not have homeowners insurance.
But heads up on this. There's already rumors that the government is going to require some sort of coverage, even if you have a satisfied mortgage. And their reasoning will be, well, if you have a flood in the area, we have to repair the infrastructure leading to your home.
But isn't that already included in the taxes?
You would think.
And I know they don't pay for like your driveway or anything leading up to it. That's all private property.
Yeah.
Even though there's easements.
And that's not the situation yet, but they're already talking about it. As I say, that's sort of the rumor on that.
So some of your thoughts, and not to get too far off the chain, and you may agree with my guest or not agree with my guest, but it's not the point. It's just an opinion that I wanted to bring to the show today. And so some of the thoughts that you have, and one of the things that your feelings are, is that basically the hedge funds, most people are familiar with the fact that when the market dropped, many of the hedge funds came in. You may have heard Blackstone or some names like that. And they buy all of these foreclosure properties, and they've been renting them out. And the thought is so that they can keep, money in the pools. And then essentially the idea was to sell them when the market regained a normal price. But you have a different opinion on that.
Oh yes. Okay.
And I would love to hear your opinion.
In the federal white paper that the Federal Reserve, Fannie and Freddie put out, they had put out a questionnaire to all the party participants, insurance companies, lenders, real estate agents, and so forth and so on. And after those 4,000 questions were answered, and what were the questions? What did they want to know? How can we bring this market back? How can we have more profit? What can we do to push the foreclosures through?
Right, because they can't. There was no way they could have dropped all of those foreclosures at the same time. It would have crashed the market even further than it already did.
But they do want your property. Don't think that they don't. The old thinking of, the bank doesn't want to be a real estate company. Oh, yes, they do. But they're doing it differently. What they want to do is gather as many geographically proximate properties. They also refer to it as geographically concentrated properties. They want to push those into mortgage default, foreclosure.
So you think they're going after properties in a certain area? Is that what you're saying?
They don't want just a house on the street.
They want that block.
They want the block. They want the community.
Why do you think that is?
They want the state. They're gathering up as many properties as possible, putting them into REO to rental programs, and then securitizing them just as they did mortgages. But now they're securitizing them as rental properties in huge bundles that they're selling on Wall Street to rental investor funds, such as corporations you just mentioned.
Right.
Blackstone, Colony Groups, and many others.
And like smaller hedge funds that came even after they stopped purchasing properties.
Pardon?
There was, they've been out of the Tampa market for a while, and they pulled out some other markets, but there's been other, even smaller hedge funds that came in and are still purchasing.
Yes. And you'll see more and more of this after the draconian or oppressive flood insurance rates kick in, which is just around the corner, quite frankly.
Any thoughts on that,
Brad?
It's
scary.
It's a different thought. It may or may not be. There's people that predicted the crash, and you're like, oh no, the sky is the limit. My house is going to be worth whatever. Like people like me was like, yeah, there's definitely going to be a drop coming. I don't think we knew how much of a crash we were in for, but people like me knew that we were in for some type of a dip.
Mm-hmm.
That would be pretty significant. Little do we know how big it would be.
And there's another crash being predicted right now.
That's what they're saying. I don't know. Because the rates are still low. Look at the rental rates. It all goes full circle. That's the thing. Like when the housing market collapsed, many people lost their job, which created this whole national that went into global recession.
Well, what do you think will happen once the draconian Biggert Waters flood insurance rates kick in? What will happen? Are these mom and pops at the beach going to be able to keep their beach home? No, they're going to have to sell it.
Not unless it's paid off.
Not unless it's paid off.
You're listening to
and it's
Tampa Home
also
Talk.
businesses. So once the businesses also drop away, then that's lost jobs.
Right.
Lost income.
It's a domino effect.
Yes.
You're listening to Tampa Home Talk. Ann Smith Pellegrino in the studio with me today, as well as Brad Hubbard. He was able to pop back a little bit with national flood experts to chime in on the conversation some. We have to take a real quick break. We'll be back in a minute for the last part of our show. And enough on the flood stuff. We're going to talk a little bit about foreclosure defense with Ann when we get back. Back in a minute.
Curious what your Tampa home is worth? Here's an easy way to find out what homes like yours are selling for in today's market. Text the word value to 813-377-2775 for a free report on Tampa house prices. We'll send you a free report with up-to-the-minute statistics based on all homes for sale sold in your neighborhood over the last 6 months in all price ranges. To get your free report on Tampa Bay house prices, just call or text the word value to 813-377-2775.
Barrel Engineering and Inspection, 813-616-3301. Are you buying and selling a home? Do you need to have your home checked out because you think it's collapsing on itself? Call us, Barrel Engineering and Inspection, 813-616-3301.
Do you need something to get you motivated to take action, to learn how to eat healthy? This is Samantha Taylor, health and fitness expert. It is time for you to get results. Call 813-377-2255. That's 377-2255.
Outside Interference Wrestling Radio is moving to Sunday mornings at 9 a.m. Mark Charles discusses the latest in professional wrestling and old school stories, featuring live interviews and in-studio appearances by the biggest wrestling stars of yesterday and today. Join Mark Charles every Sunday morning for Outside Interference Wrestling Radio at 9 a.m. Catch the replay every Wednesday night at 11. Highlights and interviews free and on demand at OutsideInterferenceRadio.com. Follow us on Twitter at OutInterference. Follow Mark Charles on all social medias at The Legal Man Mark.
On the Dave Ramsey Show, life happens caller after caller.
What an institution in radio that this has become now. Almost $500 million paid off that has been screamed about on the Dave Ramsey Show. That's just wild. And with 8 or 10 million listeners in a given moment here on the radio, we have no idea what the actual economic implications of that simple idea called the debt-free scream really are.
Dave Ramsey, weekdays 2 to 5 on Money Talk 1010, Tampa Bay's business address.
I was feeling so alone.
I was going through a really difficult time.
I was embarrassed and a little scared.
I didn't want to bother anyone.
I didn't think they'd understand.
I thought it would just make things worse.
It was tough at first, but I did it.
It ended up taking a huge weight off my shoulders.
I feel a lot better.
I'm glad I asked for help.
I asked for help.
I asked my teacher. I asked my aunt.
I asked the Trevor Project.
Now, I feel like I can get through this.
I know that I am brave.
You can do this.
Whatever it is, ask for help.
If you're thinking about suicide or need support, call the Trevor Lifeline at 1-866-488-7386. Trained counselors are there to help 24/7. Ask for help.
Welcome back. You're listening to Tampa Home Talk. Thank you so much for sticking with us through the break. We're so glad to have you here today. Thank you for catching us on Money Talk 1010. And if you missed any part of the show, it will be available via a podcast in its entirety. You can also hop on over to our website, tampahometalk.com, under radio, and we will put the whole thing there on a podcast for you to listen to. We've had some very good conversation. You know, whether you agree with it or not, I think they've been very relevant. Right? Because nobody can deny the fact that flood insurance premiums have risen.
That's right.
And so you're listening
and
to...
they're going to
Ann
continue to rise.
Yes, and there's definitely worth it, because it was a Band-Aid, right? The flood reform for
yes,
homeowners.
Many people ask me, oh, I thought that was repealed. Wasn't that repealed? I said, no.
It's a Band-Aid.
It was just amended. They used the term they The federal government used the term repealed. It wasn't repealed. There were just different aspects of it, of the bill, that were amended.
I mean, it'll be interesting to see definitely how things shake out as we move forward.
Mm-hmm.
So talk a little bit about the foreclosure defense, because this is like your love. This is your baby. You represent clients every day, against losing their home, whether it's for flood or some other type of hardship.
Mm-hmm. And there are many hardships. As you know, people have lost their jobs or they have less income. They're having to work 2 or 3 jobs, both members of the family, if it's a mom and a dad and children, they're all working, even in the teenage children. And if they have extended family members living with them, it all becomes very burdensome. And quite frankly, it's an emotional drain on them, as well as a financial drain. When they come into me, when my clients come into me, the first thing they ask is, can you help me save my home? And back to bigger waters for just a minute. My answer used to be, more than likely we can, but if not, we'll come up with some other solutions that will be appropriate for you. But the first question I ask them is, do you live on the water? Do you live near the water? Have you talked to your insurance agent? Are you being told you're in a flood zone?
Because you feel like this is so relevant. Like you might be able to fix whatever's going on now, but if they have super huge hikes in flood premiums, it's going to be a repeat process.
Right. And if they're wanting to save their home, it might not be appropriate. It might not be affordable. And so rather than getting a loan modification,
which, by the way, is another whole story in itself.
Yes,
those are very hard to get. I mean,
they're hard to get, but I have a great team of people.
And we've seen some stories. Like I had a client that he did it on his own. I had sold him the house, and we kind of lost touch a little bit. And he said, "Oh yeah, I tried to do this modification," and he had paid this attorney, and they were just dragging it on for months and months and months, and really didn't get anywhere.
I have a real problem with watching attorneys who drag their clients through circuit court, appellate court, back down to circuit court. The case might get dismissed, and the client thinks that the case has been won. No. If it's been dismissed, it's a delay. The bank will come back again and
At some point. They just put it on hold.
Again. So it is always my goal with my clients to get them to a final resolution sooner rather than later. Granted, we have very meritorious and unique arguments that I will put forth to the court, and I will fight for them. But they need to have the time sometimes to get their job or to get their income increase or to make other arrangements. I always tell my clients, you think that this is about saving your home, and it may be. But what you have to realize is that your goals are going to be on a sliding scale. What your goals are today, in 3 months, they may be different. 6 months, they may be different. 9 months, they might be right back to where they are today. And there are many variables that determine that. And it's, again, income, lack of income, increased income.
And it's sad. I'm seeing it a lot. I had a listing appointment the other day, and an older lady. She had been in her house for 30 years. She lost her husband about 20 years prior, had been a long-term employee of a very big company in the area. I'm not going to throw him under the bus. Mm-hmm. And, she counted on that 20 hours a week in combination with her Social Security, and then they've been cutting, she's been there for so long that her hourly wage is high. Her hourly wage is higher. And so I'm seeing that they're pushing some of these back to where, we're still going to keep you employed, but we're only going to give you 3 hours or 5 hours a week. Mm-hmm. So they haven't totally let them go. It's just not enough to even live on. And so, I walk in a situation and, I get a call to sell their house, but then when I start digging and talking a little bit more, it's like, oh, by the way, I'm 3 months behind. So, we have some very serious conversations at that point because they can't buy anything right away.
No.
And, we have to I have to make sure they're going to be able to, if I can help them, I will. But if we're going to just have Groundhog Day, every couple months and have the same conversation over again, it doesn't make sense for anybody.
Exactly. And there are several options when you're faced with foreclosure. It's not only a loan modification option, but there's possible reinstatement.
Right.
That's rare. Partial reinstatement leading to reinstatement. That's a bit rare as well because you're needing some funds up front.
Right.
There are outside-the-box settlements, and that would be too difficult to explain here because everything's so different for each case.
It's been so great.
And short sales.
It's been so good to have you on the show, Anne, and I can't believe an hour is already almost past. How can someone reach you if they have more questions or they want to talk more or connect with you about some stuff they heard on the air?
Yes. My telephone number is 727-363-8711.
And repeat that again. It was 727?
727-363-8711.
And you're on Facebook a lot.
I am. I'm building a new website, so I'm relying upon my Facebook right now, and that's under Ann Smith Pellegrino. Actually, you'll find a lot of information on that particular Facebook.
And we'll tag you on Tampa Home Talk on our show page, on my personal page, and across the web and on our thing. We'll tag you and put that information so people can follow some of those things. Brad, thanks so much for coming back and chiming in with us this week.
You got it. It was fun.
So it's about that time for our real estate tip of the week. So my tip of the week for this week is talking about clouds on title and owner's title insurance policy. So I had a customer just this week that was supposed to close escrow. This property, I actually sold it before. So I had everything we would have needed from the prior sale. And so what happened was this particular customer, after you buy a property, you get your recorded deed and your owner's title insurance back, or you should get it within a couple of weeks after you close escrow. So watch for that if you've bought a house, because it's really important. It's more important than your deed or your survey or anything. So hang on to that, because what happened in this particular case was title company was out of business. They never issued the owner's policy, and we were able to pull not only the settlement statement where it had closed, and they collected the insurance premium for the owner's policy, but we also provided the commitment where it was supposed to be insured and everything else, and we were able to go back to that underwriter and have them reissue the policy. And so the alternate to that, if we didn't have that information, was it would have they would have had to file a quiet title suit. That would have taken a very long time, and it certainly would not have closed on time. Thanks so much for joining us this week. We really appreciate both of you guys being our guests. Thank you so much to the person listening. We appreciate you every week. We'll be here same time, same place next week. For this week, welcome home.